Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's June 25th. This will be our chart lesson for today, and this is going to wrap up our week. No chart lessons on Fridays. Once again, the weather's kind of bad here. It's been raining all week, so if it's raining tomorrow, who knows? Maybe I'll surprise you with something or record something and upload it for Saturday. We'll see. But generally, there's no chart lessons on Fridays for any of you that are new. But let's talk about today. Really, even though there's a little bit of a channel working higher here, you can see it, and it does play out in the afternoon. But the 2 o'clock is pretty much our cutoff time, 2 o'clock Central Standard Time, because somebody will ask me what time zone I'm in. I'm in Central, so that's 2 o'clock Central Time, 3 o'clock Eastern. Generally, you don't want to take any new trades after that because you have to be out by 3. So sometimes, I mean, like today, this was a nice move, but generally that you won't see a lot of those moves. Not that you won't see moves, but you won't see a lot of good moves like that. And there's too big a chance you get stuck in a trade and get kicked out at 3 o'clock by your broker. Some brokers will kick you out a little before 3 o'clock. And also the other thing that the price action doesn't seem to be as orderly in the afternoon usually. And then finally, if you have a loser late in the afternoon, you don't have any time to make it up. You're pretty much going to have a loser, and you may have a losing day, or you may whatever. But if you have a losing trade at 9 or 10 o'clock in the morning, you got a long time to make it up, and you just don't have that in the afternoon. So for all those reasons, I don't like trading after 2 o'clock. I think you should be done. Actually, I don't. It's very rare after I ever trade afternoon. I usually like to trade from about 7 to 10, and I'm usually done by that time. Occasionally, I'll trade into 11 or 12. If it's a real strong trend day, I may trade till lunchtime or after, but for the most part, I'm not going to take any new trades. I'm definitely not going to take any after 2, but I usually won't take many after noontime, and not because you can't trade at noon on. A lot of people, there's all these rumors about and gigs where don't trade the open and don't trade, during the lunch hour and stuff like that, and I just don't really find that to be true. I think the price action is usually right regardless. And you can see here at the open, you had a little channel working up, and you had a break right there at the open. It tried several times to make a new high, and then it sold off, and we really were trending down, headed to the low of the range, and that's where we still ended up trending down to. It kind of chopped around a little bit in there, but a lot of times you'll see the price action play out perfectly, and if you're reading the price action, you can read the chart. It doesn't matter when you trade. Even during the news, I can show you that the price action holds true even during the FOMC news. The problem is it might be very erratic and move quickly, and so you want to be on the sidelines during that, but I can still show you that the price action holds true even during those times. So if you can read the chart and you understand what the prices are telling you, you really can pretty much trade safely from about 6:30 a.m. Central Standard Time to about 2 p.m. Central Standard Time. Anything prior to that or after that, it's really slow and the volume's low and you get slippage and lots of other issues. A lot of people come to me wanting to learn to do this in the part-time on the, in the after hours, and not that there's not some movement sometimes, and not that you couldn't trade it, but the price action still works. But boy, it's like watching paint dry, and you'll have to sit there for hours stuck in a trade waiting on it to move. I just don't recommend it. But anyway, let's back out. I mean, you can see the range here, and you can see the smaller trends up and down within the range. And then we just kind of got stuck up here in this half, and finally had a failed breakout of this little range here to the low side, and off it went. And all it really did was bounce off that trend line and confirm it. That was the third touch. So you don't really get a confirmation of this trend until almost 2 o'clock. So it doesn't help you a whole lot. Obviously, if you drew this and then pulled it up to the top, it gave you a target to get out up here before 3 o'clock. I mean, it actually kept going, but that would have been a nice target. If you could have got most of that move, you did really well. So let's back out. It's a little late. It's already 6:30 before I'm getting this done. And so I want to kind of wrap it up and get it posted for you. I've been getting posted late lately. And I usually like to try to do this right after about 2 o'clock and have it ready to go by 4 or 5 at the latest. So it's going to be a little bit late tonight. So let's get going with it. But anyway, it was pretty obvious it's kind of a range right here. You can see the resistance was up here. The lows were down here. And we came up here and we were coming down. We were working back to the low side. It took a little while, but we didn't quite make a new low. Prices made a higher low right there. Really from about that point on, even though it's still a range day and the bias is sideways, it had more of a, well, you really can't say that because it had kind of a downward bias here. I would say really from about 10 or 11 on, it had kind of an upward bias to it because we were just stuck up here and it kept trying to go higher or whatever. So anyway, it looked like a range. It was pretty obvious prices were still trading inside. And I had that conversation with the trader. Just because it looks like a range doesn't mean it can't change as the day goes on. So trade what you see, not what you're thinking. Because what prices will do is they'll do the same thing every day for 2 or 3 weeks, and it kind of lulls you to sleep. You get used to seeing that every day. And so you think and then prices will come out like today and it'll look like it's going to do the same thing. Mostly go sideways or whatever has been going on. And then all of a sudden something will change and prices will start dropping like a rock, and they'll say, well, this is a range day, and they start trying to buy down here, and it just keeps going, and they keep trying to buy all the way down, and they don't realize that, hey, something's changed and prices are trending lower. So make sure you trade what you see. Don't trade what you're thinking. And although this looks like a range day, if something showed you different, switch gears. Don't be afraid to switch gears. Don't get married to your position. But let's talk about the trades. Prices were trending down. We actually had a couple of legs down here. We're in this channel. We had a little overshoot, so you know what that normally means. It normally means that you're going to probably have a break real soon. So you got to be careful taking any trades early. And so that's the reason there's a nice second entry short here. Notice the new low, first entry, second entry. But because of that overshoot, I'm a little leery of that one. I marked it green. It's a second entry short with the trend. Right at the EMA, but a lot of times those are going to fail, and it's mostly sideways, so that was another reason I tended to think it was probably okay, because it's like a little failed breakout. So we may test that low, and you see we kind of tested both sides a couple of times before it failed out the bottom and took off. This is another one. You could mark this green too. I didn't mark it because it could just be that prices are in this midline right there. And so there's enough room to get out even before that. And you see how it gapped over it right there. That's a sign that your lines are in the right place. But you could take this trade. It's very aggressive. So I'll mark it green. But I think you're better off just to stick with the trend here and not counter trend trade. It's a long way away from the EMA, and it is going to be a failed break out of that congestion area. I don't have the little lines on there, but it's there. I'd probably have it right there. And right about there. And so you get this little failed break here, and then you're back in it, then a failed break down here. And it's right off the lower trend channel line, way away from the EMA. So there's a good chance you're snapping back, and you see how strongly that snapped back right there. Then we're working lower. You don't get a chance to short it here. You get a second entry short here, which would have been nice to try to take, but again, no signal bar. And all of a sudden we bounce. So draw that trend line, and then we come back here and confirm it. And notice you're coming back, and you get you really broke lower and turned higher here. So it's just a first entry long. But it does confirm that trend line, and it probably trapped when it broke lower. That's going to suck in a lot of shorts, and then it reverses real quick. And you see how it quickly shoots up, and then it starts just kind of creeping on up. And but that confirms that trend line. It's not a second entry short because you got a new low there, so it's just a first entry short. But there really is a couple of legs back there, but again, it's almost, notice the congestion right there, so it's really like a little failed breakout. So there's a couple of different reasons to say, hey, but mostly because it broke lower and then turned up, and because it looks like it probably trapped people there, and you can see that it did. Runs up to the high side, comes back, and that's just a first entry, and you got your trend line right there. You could take that trade, but I think you're better off waiting on the higher low, which comes here in that situation. And this one was just enough to, I think there's enough to easily get out. I think there's a couple of points there. So it looks like there's not a lot of room there, but there really is. And again, you could argue for that one to be green because it is off the key entry point and it is a fairly nice signal bar. But with that strong a move down, you're probably going to get another leg down. So wait till you get a little higher low, and even then, it still made the next leg down, but you would have got out of that scalp. But so you could, like I said, you could mark that green, but I would wait on the higher low there. And then you get the break lower here, and then you come up and break higher, and you're just kind of stuck in here, and you don't finally get a setup till here. And notice there's a new high. It's a second entry. You're not really looking for second entries in a congestion or range like that, but if you get one in a setup, pay attention to it, and there is one right there, and that's a quick easy move back up. It's also a higher low than that one, and it's a nice bullish relatively decent sized signal bar too, and it runs up to the top, and it actually, look at that big bullish bar, it breaks higher. There's a bunch of people going to try to chase these longs. I bet you there's somebody listening that went long right there. As many times as I'll tell you not to do it, I bet you there's somebody listening right now that went long right there. And they got trapped. And when it breaks higher and turns, it goes right out the other side. Just have a sell stop right there. Either that or let it break lower and drop a limit order a little higher in here. But it may not come back. And it probably, I don't know if it would have backed up here or not. This thing just takes off like a rocket. And it's a range, and we just came off the highs up here. So even though it took a little while to work, it's still trying to make those lows. And this is just a little spike and channel down. And then you get a two-legged correction back to the EMA. Unfortunately, I don't have a very good signal bar. If you got a good signal bar, go short right there. I do get a lower higher here with a nice signal bar. And quick, easy move. And there's a failed second entry long here, but you're starting to get away from the EMA. There's not much room to the low here. And actually, this is your signal bar, but with it being a trap, it doesn't really matter. So you could have gone short anyway, and it would have worked, but you just don't have much room right there. And we did have a break of this, and we've got two legs down, and all it does is end up catching a bunch of shorts there. And this is another one that you might, because now you got a break of this little trend line and a new low, and you got a break of this one and a new low in place, and a couple legs down on top of that. But you might, that's another one, you might try to catch an important low. So, but it's aggressive. Look how far away it is from the EMA. There's not any real true support here that would make you, the support zone down here. So there's a good chance we're heading on down. But you could at least assume that you can probably ride that back to the EMA if you're catching it right. And off it goes. And then notice it makes a first entry short and then a second entry short, and it also gives you a second entry long, and it broke lower there first and goes out the other side. That's a great long. That's what a reversal looks like. That's a great reversal pattern, and that's a good one too. And you'd look for your measured move, and it makes a perfect measured move and then backs up again. So you had a great target there, the whole 9 yards. And it actually comes back right here, and it's off the trend line, but we've already had a close outside here. But a lot of times you get those two legs. But just being that far away from the EMA, and that's been a pretty good move up, I'd skip that. And I didn't mark this short because it looks so congested, but look, that's basically, look how many times, 1, 2, 3, that's the fourth time to try to go higher there. Way away from the EMA. You've already had your close, a couple legs up. And even if it's going to hang around in here, you may, if you've got enough room to get out, again, that's one I didn't mark, but you could at least argue for it to be green. We run down, there's a lower high here, but if you drew this line there and pulled it down, it's a possibility there's a trend line. And so it's not a very good signal bar anyway here on mine, but you might have gone short there is basically where I was going with that. Notice there's a new high. I'd count that as a new high, and so that's just one leg. So there's a chance you get a second leg, but you want to draw this trend line, and the key would be, do I have enough room to get out? It's really questionable. And notice there's 1, 2, 3 bars almost stacked up there, and all of them have small bodies. So that's a little bit questionable, but it's such a good signal bar, and it is a lower high. And so it's another one you could at least argue for to probably be green. And it would have worked for a scalp, at least on my chart. But when it bounces there, now you know this trend line's accurate. So if you come back, get another chance. But notice what it does. It pushes up and it pulls back and it tests this breakout area several times and gives you a second entry long with a nice signal bar. Normally I would say this is kind of out in the middle of nowhere, so to speak. You're not back to the key entry point. It is pretty much off the EMA. But because it's a second entry and it's a little double, triple test or however many, I'd really call it we came down once, you went up, you came down twice. So it's really like a little double test. And it's a second entry long, nice signal bar. And then you get another second entry long here. And if you had a good signal bar, by all means take it. My signal bar is too neutral, and you don't want to go long right here, right back into the highs. This is actually should be right here. You just don't have much room there. And the way I normally do these lines, I try to get the most touches, but I try to include the closes where I can. And you notice we get the most touches with closes right in there. Same thing here, you get the most touches, and it probably would have been right there, and you would have that little failed break. But notice how you get the most touches with using closes. And you probably would have moved it down to there after those made those new lows. So that's how I generally do that. But you don't get a setup to go long there. If you got a good signal bar with room to get out, by all means take it. You get a higher low here, again, no signal bar, and then it sells off here. And you don't really get a chance to go short. That's too congestive. Signal bar is no good on that one. You do have a possible lower high here, but notice how it's obvious this channel is correct, and we just came off the low and we kind of double kissed it there. So I don't think you want to go short there. It would have worked, but you need more evidence. And now you get a second entry short. Technically there's a second entry short right there, but that's an inside bar. But that still looks like 2 legs back to the EMA with a signal bar. And really it's turned into congestion too, sideways. I don't have the lines on there. And you can see that. So as long as you got room to get out, you could play that one as well. It actually comes back to the trend line finally, but no decent bar there. And then you get a lower high here off the trend line. It is into these lows, but with the trend being down and this trend line still being in play, I still mark that one red. It's close to being one you could say, hey, that's a little questionable because it is, but it did break higher first and turn and went right out the other side. And generally it'll keep on running. It didn't in this case, but actually it did. The bar just closed and it gapped and it still kept running. So you would have been playing that engulfing bar. It broke higher and turned down, and it is a lower high after just coming off the other side. So there's a failed second entry long here, and again it would have worked, but we just came off the low. There's not much room in there. I think you're better off to wait. And notice we're going sideways, and finally it bounces. And notice the overshoot, which will usually lead to an overshoot on the other side, and that's what you get. And you run up, you try to go higher once, you try to go higher twice, and it fails. So if it breaks below right there, we're probably going lower. Look at it go. So that's a failed second entry long. Notice the new high, and you go first entry, and when it broke higher right there, second entry. So it didn't quite get a scalp, and when it turned down, the minute it turned down, you'd have a sell stop one tick below these three matching bars, and boom, and then look at it go. Probably trap some longs right there. Runs down, and we just find support down here again. And notice we made that low, test it once, and we test it twice. But this also confirmed that trend line. Or no, it didn't. That was just the second. Trend line doesn't confirm till up here. So you wouldn't have had that trend line right there. But you still got all this support. And it's like a little failed break lower. And it's a little aggressive. But we did have a break here. And we do have a couple of different swings down to a new low. And it's a little failed break. Again, waiting on a higher low is better. And that comes right here. And that's why that one's blue. And that does it like a look out, push through and pulls back and tests it. It's not a failed second entry short, but it's still a reversal type pattern, and it actually broke lower and turned up. So when it went out right there, go along with it. And then there's a failed second entry short there, but there's not much of a trap or anything there. This would have been, of course, people probably use that for a signal bar, but I don't, not being away from the EMA, and I'd skip that one. It turns out to be a pretty nice move, but I still don't think it's a very good setup. And we just kind of get into this congestion, and that's too congested, really. We finally get up to the high, but I'd want to wait on a high. We don't really have a close outside this, so I'd want to wait on a lower high, and that comes right here, too bullish, right into the EMA. We do push on through and pull back and get a failed second entry long there, but by the time we get it, it's so congestive. But that trap may be enough, and it would have got you out of the scalp, but then it bounces again. And then you get a breakout, pull back, and that's a higher low. And so if it breaks above that, it's probably going to go up and try to make a new high. And that's what it does. The key here would be having enough room to get out before you get back to the highs. And then it runs back down, and you just don't really get a good setup to go short. There's a possibility right there on a lower high, but it's right back into that, and that seems to be holding. It doesn't end up holding, but it comes back down here, it makes a low, and then it makes a higher low, and it actually breaks lower and turns up. Go long right there. Now you're back up to the highs again, and it breaks higher and turns down. Go short right there. It makes a lower high here, but now you don't have enough room really. This one you would have gone short when it below this bar. After it broke higher and came back through, it's one of those engulfing bars. I don't think you'd want to enter down here because you see it would have still worked because you wouldn't have got stopped out because your safety stop has to go one tick above this your signal bar. And that's why we put it where we put it. And if you notice, prices came way back here, and if you'd put it anywhere but where it goes, you'd have got stopped out. But you don't want to enter down here to begin with. Just like here, it's too close to the lows. And this one's engulfing too, but even going short there, you don't have a lot of room. And you don't know that it's going to break through. And when it does, you probably want to go long. So notice the new high, first entry, second entry, and that's a nice bullish bar. It's an inside bar, but it's really got matching lows and highs. The matching lows is all that really matters. You can go, as long as you got room, you can go long one tick above that. You do have to think about that EMA right there, but on a range day, one that tight, you're going to have to trade in and out through that. So you just got to look at the rest of what's going on and just make a calculated risk. Is it worth risking? I mean, look how many times we bounced across there. And that's the first time we got lower. So if it breaks higher, we're probably going back to the other side. And that's what happens. And then We get a close outside, move to a new high, and look at that big bearish bar. Again, you'd like to wait on a lower high, but that's also, notice the low. Actually, that's not a second entry because we broke lower right there too. So the second entry was right there. And if you'd have taken it, you probably got burned. And it bounces up and you get a little failed breakout. That's congestion. Notice there's no body, a second bar, a third bar, not much body, and then a fourth bar. So really you already had congestion there. So be careful with those. Sometimes they make great entries, and most of the time they don't. So you're better off just to avoid them. So this right here doesn't happen to you. And it turns up, and of course it's probably going to fail and come back. And you're looking for it to come back down here. And this actually would have been a little lower by now probably. I'd probably still keep it right along there for now. And you just get another second entry long right here. Notice that high, first entry, second entry. Nice bullish bar. There's a high or low here, but you're not interested in that right in the middle of a range. It's not a good signal bar anyway. And then you get a second entry short up here. It's not a perfect signal bar. It still closes pretty much in the bottom 1/3. So you may take that one. You may have had a better signal bar. If you did, it could have been red. And I don't see anything else here. There's a failed second entry long here, but it's just too risky. And then it does bounce right at the key entry point, but not a very good signal bar. And this is actually a spike and channel down. I don't have it drawn on there, but you can see that. It's a little spike down into a channel, and that's the first close. So notice you finally get a little trap there, but again, you're just kind of going sideways. And I think if you went long there, you'd have probably got burned because look, that comes back. So I don't think you want to take that one. And anyway, that's what I saw. Just a range day. And we spent a lot of the day right up here in this tight thing. And so the only thing you can do is buy these lows and sell these highs. And it's got a little bit of an upward bias, so the buys were probably the better plays than the shorts were. But that's flat enough you can just trade it off both sides, be honest, especially with that stronger resistance. You got resistance here, but you got even more right there, right behind you. So you kind of got a double play on the resistance there, giving you a little more incentive to go short there, basically, is what I'm getting at. So anyway, we're almost 30 minutes here, so I'm going to wrap it up. A lot of trades today considering. A lot of green ones too, though. But hope you had a good trading day. Hope you've had a good week. We'll be back again to do it Monday. Maybe you'll hear something from me tomorrow, Saturday. I'm not sure yet, but I'll definitely be back Monday. But I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.